All right, let's dive right in. This week on the Nigerian exchange was, well, it was something else. We're talking about the market cap blowing past 125 trillion naira in just 5 days. So, how did that happen? We're going to follow the money, see which sector basically took over the entire market, and uncover a massive corporate deal that landed right in the middle of all the action. Let's get to it.
So, the main headline for the week? Pure, unfiltered bullish momentum. I mean, the market didn't just inch up, it surged by a staggering 6.95%. That pushed the total value, the market capitalization, clear over 125 trillion naira. And what was the fuel for this fire? A massive flood of liquidity. And it was almost all concentrated in one place, the financial services sector. They soaked up nearly 3/4 of all trading. That's really the core story we're going to unpack.
You can see this story right here in this chart of the all-share index. Look at that upward climb. Yeah, there was a tiny dip midweek, but then the market didn't just recover, it hit the gas. And here's the really telling part. It closed on Friday at its absolute highest point for the week. That's a huge signal, right? It tells you the buying pressure wasn't just strong, it was actually building right up until that closing bell.
So, what exactly fueled that nearly 7% market jump? Well, the answer is a tidal wave of new cash. The turnover volume didn't just go up a little bit, it exploded. We're talking a 64% increase compared to the week before. And to put that in perspective, that's over 59 billion naira in new money pouring into the market. Investor appetite wasn't just healthy, it was absolutely voracious.
Now that massive rush of liquidity, it wasn't spread out evenly through the week. Not at all. It was basically concentrated into one single explosive day. You see that huge spike? That was Wednesday, February 18th. The market just went into a frenzy. 3.66 billion shares changed hands on that one day alone. That's nearly half of the entire week's trading volume, all before things started to cool off a bit into Friday. So you have to ask, what happened on Wednesday?
So we know there was a flood of money, and now we know exactly where it went. Look at this. The financial services sector wasn't just the market leader. For all intents and purposes, it was the market this week. It commanded an incredible 73% of the total trading volume. With over 5.6 billion shares traded, pretty much every other sector was just watching from the sidelines.
Let's zoom in even further, okay? Inside that already dominant financial services sector, the story gets even more concentrated. Just 3 banking giants, FCMB, Access, and Zenith, were responsible for trading a whopping 3.6 billion shares. I mean, just think about that for a second. 3 single stocks made up almost half the activity of the entire market. This wasn't just a sector rally. This was a rally led by a handful of absolute titans.
Okay, so let's zoom back out and look at the broader market. And what do we see? It's basically a sea of green. The Sharia-compliant stocks and the industrial goods stocks really led the charge with double-digit gains. But the party wasn't for everyone. Amidst all this celebration, the NGX Growth Index took a brutal 15% hit. And that tells us something important. Investors were flocking to the big, established blue-chip companies and rotating out of those smaller, growth-oriented stocks.
Now, in a hot market like this, you always expect to find some pretty spectacular individual stories. And we did. Take Zichi's Agro-Allied Industries, for example. It shot up over 60% in a single week. Across the whole market, 71 different stocks saw their prices rise. And this highlights a really interesting dynamic. While the big banks were driving the trading volume, the really explosive percentage gains were being found in the smaller, more nimble corners of the market. Of course, not everything went up. That's just not how it works. 41 equities actually ended the week in the red. Some saw pretty big corrections, like RT Briscoe's 20% drop. But this is the natural flip side of a bull run, right? It's investors taking some profits off the table, reallocating their money. It provides a crucial bit of balance to the whole week's story.
Now, let's take a quick look at exchange-traded products, or ETPs. You can think of them as baskets of stocks that trade just like a single share. And here, the story was the complete opposite of the wider market. Volume got cut by more than half. This is such a classic sign of capital rotation. It suggests investors were selling these diversified funds so they could go buy individual stocks directly. They wanted more concentrated bets in a really hot market.
But not every other asset class saw a drop. Over in the fixed income space, activity actually increased. And it was mostly led by demand for sovereign sukuk bonds. These are Islamic-compliant government bonds. So this suggests that while one group of investors was out there chasing high-flying equities, another group was quietly moving into the relative safety and predictable returns of government debt. Interesting contrast. And this brings us to the huge corporate event I hinted at in the beginning. Remember that crazy trading volume on Wednesday? Well, it is probably no coincidence that on that very same day, the industrial giant Dangote Cement listed nearly 120 billion nairas worth of new commercial papers. Yeah, this wasn't just a side story. It was a defining moment for the week.
So what exactly are commercial papers? You can just think of them as short-term IOUs from big, reputable corporations. And why were investors lining up to buy Dangotes? The answer is simple: the yield. Just look at these returns. They were offering 17.5% and even 19% just for holding the debt for less than a year. I mean, in the world of fixed income, returns like that are practically unheard of, incredibly attractive.
So, to wrap it all up, it was a week of massive gains and just extraordinary liquidity, and it was all driven by a handful of banking and industrial heavyweights. With investor appetite clearly at a fever pitch, the big question is, can this last? Is this the beginning of a sustained bull run, or is the market just getting a little overheated? I guess that's the big question we'll all be watching in the weeks ahead. Thanks for tuning into this breakdown.